Our job here at Charting Wealth is very simple. It's to help you see the patterns, to separate the signal from the noise, to help you determine whether the ETF or stock you are looking at is going up or down. We keep our charts super simple but highly accurate because we believe in Occam's razor that the simplest way to solve a problem is the most effective. You have too many cogs, too many bolts, too many things in the machine to screw up the decision making, and you're going to end up with analysis paralysis. We keep it simple and direct, but effective. You guys who are with us every day, you see it. Now, let's jump into the 10 to 15 minutes of the most important time you're going to spend in the day when it comes to growing your wealth in the future, because we want you to have a virtual money printing press. And when we say virtual, we don't mean the kind of virtual trades we do. We're talking about when you get good at this, when you figure this out, put all your knowledge together, and have practiced and shown yourself approved, you have your own money printing press. And when that day comes, when the balloon goes up and the market crashes, you're not one of the idiots sitting there watching everything in your bank account go to zero. You know to pull it, and you know to start looking for opportunities that are going to abound for the people who know what the hell they're doing. In fact, it's going to be one of the best money-making opportunities you've ever seen in your lifetime, as everything's on fire. People are throwing themselves off buildings, and the market is crashing, and all the news is a bunch of screaming idiots. You're not going to be one of those. Let's jump into this market. Everything up for the day on Friday. What do we see on the S&P 500? We see another up week. We see, when we look at our Heikin Ashi candlesticks, we see that we've hit a higher mark on the candle, green up candle with an even higher wick on top, no wick on the bottom. Price percent oscillators moving up about the same angle it has as it had previous week. And we see the derivative oscillator gaining some upward momentum. We go from the weekly to the 2-day. What do we see there? We see, again, about flat. It's actually started to move up just a little bit on the price percent oscillator. Derivative oscillator still losing momentum. And we look at the 2-day chart, and we see that the candle's closing just above, that the wicks just above the prior candle has closed above the prior. Prices above the 2-day and above the weekly. That is good to see. Now, what do we see on this 4-hour chart? Again, it's been squirrely. It basically has been primarily a sideways slide. Haven't had enough momentum to cross over, getting us in. So we'll watch and see how things shape up on Monday. Again, up for the day, 0.47%. We've got to have a crossover to have a trigger pull. And that technically at the end of the day is a crossover. You can sure look at the charts on Monday morning and see what things look like at 10:30 if you're interested in jumping in to the market as high as it is. Again, we've got the market trying to sort itself out. Derivative oscillator still losing momentum. Price percent oscillator trying to cross over. So those of you who are really hard up, maybe at the end of the morning you might have a confirmed crossover, might have a jumping in point. You can sure check out the market at 10:32. But let's go on to the place that we've actually been trading and trading so very well. Q's up for the day, 0.09%. We see another strong week of up movement, price well above the weekly trend line. We see the price percent oscillator heading up at the same strong angle it's been going up for the last now 3 weeks altogether. We see that the derivative oscillator is gaining upward momentum. We go to the 2-day chart. What do we see there? We see that we basically have our latest 2-day candle. Again, this is the first day of the latest candle. The prior candle ended on Thursday. So far, this latest 2-day candle is a bit of a pullback. It's the first red candle of any kind we have seen in weeks now. But what we see is a red spinning top. It's not as strong as a red down candle, but it is a red spinning top, so it's showing you some pullback momentum. As far as the Heikin Ashi, the average pace goes, that's what Heikin Ashi means in Japanese. Great training at the website. Heikin Ashi candlesticks, 100,000+ people have taken that training. If you've not taken it yet, it's for free. You can find it on YouTube, and you can find it at our website, chartingwealth.com. Price movement still above the 2-day, well above the weekly. Let's look at the 4-hour chart and see what we see there. We see there was down movement in the morning on the Heikin Ashi candlesticks, a recovery in the afternoon. For the day, up 0.09%, 190.65. Now that's still quite beautiful. High we've made it up to is 191.22, and that was back in the morning on Thursday. So again, up a little bit for the day. We see that the price percent oscillator is about laminated on the red signal line. So again, keep your eye on that 2-day chart. If it starts to pull back really hard and starts dropping, pushing through the 4-hour chart, that could be a problem. But again, movement for the day was up. That is nice to see. Our trade is still in effect for the Qs, and of course has been since we had the trigger pull back on the beginning of the month. And of course, it has been a good month for us so far, from 181 about a jumping in point up to 191 something. So again, over the course of 3 weeks now, not bad at all, is it, my friends? That's the beauty of using the weekly vertical crossover along with the 2-day crossover, pull back, and then a crossover going back up using the 4-hour chart as a trigger for jumping into a trade. You want to know more about what we do here? Of course, great trainings for free at the website, these daily reviews that we do 4 days a week. We're doing the comprehensive review and forecast for you right now, talking about what happened over this last week, what to look for over this new week. Of course, all of those are available for free. If you've not purchased our book, we have our book for sale. If you live in the United States, you can look in the show notes, follow that link, purchase the book. If you happen to live overseas, a little harder. The folks that we use as our clearinghouse to invoice for the books don't allow overseas orders, but we at Charting Wealth will send you an invoice through PayPal. Pay that. We'll send your book anywhere you can get mail in the world. And again, just write us cw@chartingwealth.com. Our book details out completely what it is we do here at Charting Wealth and the methods, the methodology. He explains the price percent oscillator, derivative oscillator, Bollinger Bands, trend lines, Heikin Ashi candlesticks. It's all there, plus the way we think, how to control your emotions, all the important stuff you need to know to understand what it is we do here. Buy the book. You won't regret it. And become a Patreon supporter and you get even more cool stuff. Let's keep pushing through these charts. We're going to leave the Qs. Successful trade underway there. Again, I want you to practice with us every single day. 10 to 15 minutes, all we ask. Let's go to bonds. Up for the day, 0.34%. Bonds look like at the beginning of the week they were going to cross over going down, and they just couldn't do it. Ended the week with a green spinning top, means indecision. Lots of it, almost a doji, tending up. That means that the weekly chart is still in a confirmed up move. We go to the 2-day chart, and we see that the first day of this latest 2-day candle is an up candle. Derivative oscillator losing downward momentum. Price percent oscillator heading up, but hasn't crossed over going up. So still in a confirmed down move. What does it mean when the weekly's going up, the 2-day's going down? When they're not going in the same direction, means we don't have a trade. We still watch to see when they set up for us. 4-hour chart. Again, up in the morning, bit of a pullback in the afternoon, end of the day up 0.34%, still gaining upward momentum, heading up. Derivative oscillator, price percent oscillator heading up. We'll wait and see how the chart shakes out when it does. And again, why do we track TLT 20-year bonds? Because when the stock market starts to crash, which it will at some point, we want to have alternatives. Those could be TLT. They can also be inverse funds on the market, such as QID, PSQ, SH. The first two are short funds for the NASDAQ 100. The second is a short fund for the S&P 500. That means they run in opposite directions when the market goes down. Market goes down, those funds go up. Bonds, however, are sometimes a place where money goes when the market's not doing well. If we see the funds start to accelerate up, then of course we have the ability to jump into that and to ride that up. So again, we're going to follow bonds and we're going to keep an eye on them to see how they sort out. And again, you stay in the market day after day, pay attention to what's going on, you will learn what is happening, and you will then be able to follow it. And in the future, hopefully, make lots of money off of it. So we're going to go from 20-year bonds now to gold. What's going on with gold? Gold, of course, is another thing we pay lots of attention to because not if, I almost said if and when the market crashes, gold is expected to fly through the roof. Right now, as the market is going up, 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 gold has been going down, down, down over the last few weeks. Gold ended up for the day 0.66%, but again, another down week. Wick is below. We see that the body of the candle is also below the prior week. We had a weekly vertical crossover going back to the Friday the 29th of March, that last week in March. And then, of course, over these last 4 weeks now, we've seen the market move down, actually sort of flat in the week ending the 12th of April, but the other weeks heading down. Derivative oscillators lost a little bit of downward momentum, as has the price percent oscillator, both in the negative, though. Price percent oscillator still heading down on that weekly chart, price movement below the weekly trend line. We look at the 2-day chart. What do we see there? 2-day chart's bouncing up, pushing through the 2-day trend line. Hasn't crossed over yet going up, but the first day of this latest 2-day candle, nice big up candle, 0.66%. Price closed at 121.37. So again, bouncing up quite strong after hitting a low of 119.55. So again, hasn't crossed over going up, but those alarm bells are going off. We talked about gold hitting a bottom there around the 120.20 mark, and it appears that it has done so, at least in the short term. Those of you who were involved, as I was, in that bottom, that short trade, again, pay close attention to that bottom as it springs off the bottom at about 120.20. And again, we'll see how this candle ends up because it's not formed. It'll finish forming on Monday. We go from the 2-day to the 4-hour, and of course you see up movement in the morning and then tempered off in the afternoon, not up a lot more. Derivative oscillator gaining upward momentum, price percent oscillator heading up. Again, still below the weekly, but it has pushed through that 2-day trend line, so warning bells are going off. Remember, you can always pull your trade at any time. It's profitable, and you do want to look for floors. We penetrated that first floor, which is the 120, 150 or so mark, and we're able to penetrate that all the way down to 119.55, but things are recovering quickly. Folks, that's where we are as we end the day. The pressure on gold is still down. Pressure on the market, that is the S&P and the Qs, NASDAQ 100, are still up. Bonds are still in confusion. That's where we are. We so appreciate you being with us. All we ask is that you spend 10 to 15 minutes with us a day. Look at this as a time investment in your future. I believe it will be the most profitable 10 to 15 minutes that you spend a day in the long term. If you can't do it every day, then don't do it any day. You need to be with us every day if this is going to be valuable for you. Why? Because you've got to see the patterns. You've got to study a little bit every day. You will be amazed at how much that time will add up over time and how much you will learn. Buy the book, be a Patreon supporter, be with us every day. You need the trade, the daily market worksheet, and the weekly market worksheets. They're all available in the show notes for free. Please make sure to subscribe. If you're not a subscriber, you don't get all the great stuff we put out when we put it out. And so be one. Buy the book, support us. God bless you, my friends. All the best from the whole team here at Charting Wealth World Headquarters.